Good afternoon, everybody. My name is Mark. I am the stock market jobber, and my mission is to teach people how to trade and how Wall Street really works. And I am a good person to do this because I spent over 20 years in the institutional trading world. I got hired out of business school at New York University by Mario Gabelli, who's one of the greatest traders in history. And then I spent some time trading directly for Steve Cohen, who's one of the greatest traders in history. Um, Well, Mario's actually more of a portfolio manager or a value manager. But regardless, I worked for two of the best that there have ever been. So I was very honored. From there, I went on to be the head of trading at three different institutional money managers where I oversaw all kinds of strategies. I mean, you name it, I've overseen it. High frequency, deep value, all kinds of hedge fund strategies. I actually spent some time as a market maker. So when it comes to trading, I've been around the block a few times. And today I just want to do a quick little lesson here on Apple. This isn't necessarily a trader recommendation, but I just want to teach you all what a resistance level is. When a market is moving higher, like Apple did back here, or like Apple was doing right up until the beginning of February, it's because there's not enough sellers or supply or sell orders. We can use these terms all redundantly to fill all of the demand. Or buy orders. So the buyers are forced to bid a premium to attract sellers into the market, but that makes the price go higher. It forces an uptrend. When we get up to a resistance level, the tide turns. At resistance levels, there is enough supply or sell orders to fill all of the demand or buy orders. So that's why when markets are going higher and they get to what we call resistance, they either stall out or they reverse. Now back here we reversed. This happens because some of the sellers start to sense that there's other sellers around, which is why the shares stop moving higher. And they start to get worried that they're not going to be able to make their sales, so they offer their shares out at a lower price. Then another seller sees that and they decide to undercut them and they go to a lower price, and so forth and so on and so on. And it creates this snowballing effect, which sends the market lower. Now, we've been testing this resistance here for about 2 weeks. If we don't get through it, the same thing could happen. Sellers could start getting anxious because they sense that there are other sellers around. That's why the shares haven't moved higher in a few weeks. And they could decide, all right, well, there's this resistance around 155. I'm going to go to 154 and a half. The next person could say, I'm going to go to 154.30. Someone else sees that and says, you know what, I really don't want to miss this. I better be the lowest price in town. So I'm going to go to 134.20 and so forth and so on. And it creates a snowball effect. So just something to watch. If Apple breaks out above this over the next few days, great. But if it doesn't, we could start to see a pretty rapid sell-off. So just be aware of that. So once again, please, my name is Mark, the Stock Market Jobber. Please subscribe to our YouTube page here. Please visit our website, stockmarketjobber.com, and please check back soon because there could be a big move coming in the market over the next few days. Thanks, everybody. Talk to you soon.